You can access a single piece of paperwork in about 5 minutes that, for many Americans over 65, results straight into a permanently higher Social Security payment every month. This is not a quick bonus or a brief fix, but a lifelong boost to the money hitting your bank account. The tragic part is that folks are not missing out because they do not qualify. They miss out because nobody told them this paperwork was out there or pointed out the exact detail to check once they do look at it. For the past 10 years, I have dug deep into retirement systems, senior tax benefits, and the financial laws impacting older Americans year after year. And the most common tragedy I witness is honest folks getting paid less than they actually earned, all because of an incorrect number sitting in a federal database that no one told them to double check. Right now, I will walk you through what this paperwork is, how to get your hands on it, exactly what to search for, and the specific form you need to fix any errors you spot. But hear this before we move forward. There is a very clever scam attached to this subject right now in 2026, targeting seniors specifically. It is incredibly deceptive. I will break down exactly how their trap works and give you the one detail that reveals the fraud instantly. The scammers are aware that folks who just found out about a way to increase their income are the perfect marks for their pitch. We will dive into that after I show you the correction steps. Keep watching because this knowledge could save you thousands of dollars. Later in this video, I will also share a free government resource most folks have no idea exists. It pulls up your past income history spanning decades and acts as solid proof for your correction, even if your old papers are long gone. Missing your old tax boxes is not a deal breaker. This resource is a game changer for anyone who thought their past work history was lost for good. Now, before diving in, let me be clear. If you are someone who takes action on good advice instead of just watching videos, you belong here. Everything I share on this channel dives into specific rules, forms, or deadlines that change your monthly money. Hit that subscribe button and tap the bell icon. My upcoming video breaks down a Social Security rule for folks who claimed their benefits early and thought that choice was set in stone. It is not set in stone, and the time limit to fix it is much shorter than you might think. Make sure you are subscribed so you catch it. So, let us talk about this crucial paperwork and why a single bad number is quietly stealing from your monthly payment right now. This paperwork is your official Social Security statement. It does not cost a penny, and it sits inside your personal account on the main government website, SSA.gov. If you have never set up your portal, it only takes around 5 minutes. The moment you log in, your statement is right there waiting. Inside that file is a section most folks have truly never glanced at. It is your total earnings history, mapping out every year you ever held a job and paid into the system, tracing all the way back to your teenage years. Every single year has a dollar amount listed next to it. That history is the bedrock of your retirement money. Social Security figures out your payout by taking your 35 highest paid years, adjusting them for inflation, finding the average, and putting that average into their special math to get your final monthly check. Because your entire payment relies on that average. Just one bad number messes up the whole thing. If one year shows only half your actual pay, or shows a 0 when you know you worked hard, your entire average drops. The agency's own numbers show that just 1 year of incorrect or missing wages can chop about $100 off your check every month. That means losing $1,200 a year. If you are retired for 20 years, that single mistake silently drains $24,000 from your pocket. If 2 or 3 years are wrong, the losses multiply fast, and the government is never going to warn you. You will not get a text, and you will not get a letter in the mail. The mistake just sits there, taking money out of every check, until you take the time to open that file and look for yourself. Let me explain who is most likely to have uncollected money sitting in their file right now. There are 4 main groups of people. If you hear your own situation in any of these, checking your history is not something to save for later. You need to do it this week. I will explain why acting right now in 2026 is so urgent right after we cover these 4 groups. The first category includes anyone who had a job at a small company back in the 70s, 80s, or 90s. Back then, mom and pop shops usually did payroll manually. The boss might have used a paper ledger, a simple bookkeeping setup, or just handwritten notes. Simple, honest slip-ups in reporting your wages to the government happened way more often than they do now. And those slip-ups usually slipped right by because no one was verifying the numbers. If you put in time at a local store, a family business, or any place without a big professional accounting team, your history is a prime candidate for these kinds of mistakes. Let me give you a real-world example of how this plays out. A fellow I will call Daniel worked for a local landscaping crew for 4 years in the early 90s. He showed up, did the work, got paid. Years later, a relative told him to pull his Social Security file. When he looked, he saw those 4 years were recorded at only about 55% of what he actually made. The boss had done the payroll by hand and sent in the wrong numbers every single year. Daniel had no idea. He filed a fix using his past tax forms as proof, and his lifetime monthly check went up by more than $280. That was money sitting miscalculated for almost 3 decades. The best proof for folks in this category are your original W-2 forms from back then. If you kept them, they are your strongest evidence. If you lost them, your federal tax returns for those years showing your reported income are the next best thing. And I am going to show you 2 ways to get those old records back, even if you think they are gone forever, including one free government system most folks do not know about. We will get to that soon, so keep watching. The second category is anyone who has ever been self-employed, owned a business, done freelance work, or acted as an independent contractor. Income from working for yourself gets reported on Schedule SE, which goes with your yearly Form 1040. That reporting chain has a lot more room for errors than a regular W-2 job. A year where your self-employment money was not sent to the agency correctly or was logged at the wrong amount can leave a 0 or a tiny number on your permanent record. That silently shrinks your payout calculation for the rest of your life. If you were your own boss at any time, even just for a couple of years, look very closely at those specific dates when you review your file. The proof you need here is your Schedule SE and the matching Form 1040 for the years you are questioning. Together, those papers prove what you earned and what Social Security taxes you paid. Now here is a secret for this specific group that most videos skip right over. If your self-employed income shows up correctly on the statement but seems lower than you remember making, double check how your Schedule SE was filled out back then. Your tax is based on your net earnings, which is what is left over after business expenses. If your expenses were reported wrong and made your net income look too low, the government recorded a smaller number than your actual situation deserved. The third category includes anyone who switched jobs a lot during their working years. Every single time you were hired by a new boss, it created another chance for the payroll folks to type your Social Security number wrong, misspell your name, or link your paychecks to somebody else entirely. In those situations, the money got reported, but it did not get credited to you. The more times you jumped from company to company, the higher the odds that at least one of those moves created a permanent glitch on your file. Look extra closely at the years you switched jobs. Those transition times, the year you quit one place and started another, are where mistakes happen the most. Check your memory of who you worked for against the dates on your paper. If a year shows strangely low wages from a time you know you were working full-time at a certain company, that gap is worth looking into. The fourth category is the one I need to speak to most directly because it is always the most ignored and the most financially damaging mistake of all. This is anyone who changed their legal name at any point while they were working and did not immediately tell the Social Security Administration about the change. Here is exactly what goes wrong in that scenario. If the name your boss sends to the government does not match the name currently on your official file, those wages might never connect to your account. They just float around in the system, credited to no one. Real labor, real paychecks, money you sweated for, simply not counted toward your payout because the names on the paperwork did not match up. We see this mostly with women who altered their names due to getting married or getting divorced. A woman who put in 15 years of work under her married name, got divorced, and switched her name back, might have a huge stretch of her career sitting in the database attached to a name that no longer links to her current file. If you are a woman who changed your name at any point in your working life, and you never went out of your way to confirm that your older wages are linked to your current name, you need to check the dates around that name change right away. Those are the prime spots for zeros or mistakes that wipe out real work you actually did. Now here is something you need to hear loud and clear, because the clock is ticking specifically right now in 2026. The rules give you exactly 3 years, 3 months, and 15 days from the end of a tax year to fix your earnings for that year normally. The official legal code is 20 CFR section 404.802. Under that timeline, the normal deadline to fix your 2022 wages was April 15th, 2026. That day has already come and gone, but here's the secret most folks talking about this leave out. The law has built-in loopholes that let you make corrections even after that standard deadline has passed. If your boss sent their reports in late, the door stays open. If the agency itself messed up the paperwork or made a typing mistake, the door stays open. And most importantly, if you filed your own federal taxes on time for that year and your tax return shows different income than what the government has on file, that on-time tax return counts as a loophole and you can still fix your record. This means if you filed your 2022 taxes before the due date and those taxes show income that does not match your current Social Security file for that year, you can still get it corrected. However, the longer you wait after the standard cutoff, the tougher it is to prove your case. Take action now. Look at the year 2022 first when you open your file. If things do not match up and your 2022 federal taxes were filed on time, those tax papers are your golden ticket and your fix is still entirely possible. Now let me walk you through exactly how to fix the mistakes you find. I will give you the name of the form, the rules for turning it in, and the two major traps that ruin most correction attempts before anyone even looks at them. I also mentioned earlier that there is a free IRS tool to pull up your old income records, even if your file cabinet is completely empty. We will cover that right now. Stick around, because this flips the script for anyone who thought their old documents were lost to history. The paperwork you need is called Form SSA-7008. The full official title is Request for Correction of Earnings Record. Jot that down. SSA-7008. It does not cost anything. You can grab it right off SSA.gov by typing SSA-7008 into the search bar, or you can pick up a physical copy at any local Social Security branch. You can also call 1-800-77-21213 and ask them to drop one in the mail for you. The paper is just one page on the front with the directions printed on the back. It simply asks for your personal details, the specific dates you think are wrong, and the true amount you made those years. Filling it out is very straightforward. However, there are two common mistakes people make that kill their chances right out of the gate, and I want to ensure neither of them trips you up. The first mistake costs folks weeks of lost time. Currently, the government does not let you turn in Form SSA-7008 through your online account for most situations. You cannot simply log in and hit submit. Even though some websites might tell you otherwise, you have to mail this form or walk it into your local Social Security office yourself. Digital filing is usually just not an option for this process. If you decide to mail it, make sure you use certified mail and ask for a return receipt. Write down that tracking number before you lick the envelope closed and put it in a safe spot. That tracking code is your proof of the exact date the agency got your paperwork, which is vital if you need to check on your status later. And listen to me carefully. Never mail them your original papers. Only send copies and keep the originals in your own house. If you drop the form off in person, politely ask the worker at the desk to make copies of your proof right there and make sure they hand your original papers back before you walk out the door. You can find the address of your closest office on SSA.gov with their locator tool. If you are unsure which branch covers your town, just dial 1-800-772-1213 and they will tell you where to go. Now for the second trap. This is the biggest reason these requests get thrown out, and almost nobody warns folks about how deadly it is. Form SSA-7008 demands your real handwritten signature. Typing your name does not work. Using a fancy cursive font on your computer does not work. You have to physically sign the paper with a pen. Here is why this is such a big deal. Under their rules, a form without a signature is treated like it never existed. That means if you mail an unsigned paper right near a deadline and they mail it back to you after the deadline has passed, your chance to fix your record is gone forever. You mailed it, but legally they received nothing, and the clock ran out while your rejected form was sitting in a mail pile. We have a documented example of this exact nightmare. A gentleman mailed his SSA-7008 on April 10, 2026 to fix a 2022 wage error. That was only 5 days before the April 15th cutoff. But he forgot to sign his name. The agency mailed it back on May 1st, 2 weeks past the deadline. His window slammed shut and his fix was rejected. Sign the form. Before you seal that envelope, pull the paper out one last time and look for your signature. That one tiny mistake has destroyed perfectly good claims that would have brought in hundreds of extra dollars a month for life. Here is a pro tip that is not required, but really speeds things up. Include a one-page cover letter with your SSA-7008 submission. The staff sorts through a massive pile of these requests every day. A short, direct letter explaining exactly what is wrong and what needs fixing makes your case much easier to hand off to a reviewer. It pushes you toward the front of that 10 to 90 day waiting period instead of the back. Use wording like this. I am requesting a correction to my earnings record for the following years. For the year in question, my records show earnings of the correct amount, while my SSA statement shows a different, incorrect amount. Attached are copies of my W-2 and federal tax return for those years as supporting evidence. Then, list out every year you are fixing, putting the government's wrong number in one column and your correct number right next to it. Keep it polite and stick to the facts. Keep it to one page. The point is to give the worker everything they need to grasp your problem without digging through your attachments. When the issue is crystal clear on the top page, they process it faster. The best possible proof you can provide is your original W-2 from the year in question. If you have it, put it right at the front. The government sees W-2s as top-tier evidence, and they usually push the fix through without a hassle. If your W-2s are gone, your federal tax return for that year is your next best bet. Your Form 104, showing your reported income acts as solid backup proof, especially if you have other papers to pair with it. If you were self-employed, your Schedule SE and your Form 1040 are your main pieces of proof. Those two forms prove what your final business earnings were and the taxes you paid on them. What will not work as proof? A handwritten note about what you think you made, a timeline you typed up yourself, or a spreadsheet you made from memory. Those hold no weight on their own. You need official documents. Now let us talk about that tool I promised you at the start. This is the lifesaver for folks who do not have a single old document left in the house. If your W-2s and tax returns are completely lost, you have two specific ways to pull them back up that most folks never hear about. First, the Social Security Administration itself can actually pull your old W-2s dating all the way back to 1978. And they will do it for free if the reason is to fix your earnings record. When you talk to them, you have to use these specific words. I need W-2 information retrieved for the purpose of correcting my earnings record. That exact phrase makes the process completely free. The second option is IRS Form 4506-T. This is a free document called Request for Transcript of Tax Return, and it pulls your past wage data straight from the IRS computers. This transcript lists exactly what your past bosses reported to the IRS under your Social Security number for whatever years you ask for. You can use this transcript as official proof when you submit your SSA-7008. You can print Form 4506-T off irs.gov, fill in your details and the years you are looking for, and mail it to the IRS address on the paper. They send you the transcript for free, and Social Security accepts it as solid evidence. This is incredibly important because so many people just give up. They think that without their original papers, they cannot win their case. That is dead wrong, and it leaves serious money on the table. Between the free W-2 pull and the IRS transcript, you can almost always track down the official proof you need going back decades, even if every personal copy you owned was thrown away. Having no paperwork is not a dead end. It just means you take a different road. Fixing an error is the biggest shortcut to a higher payout for most of you. But I want to give you alternative options, because not everyone will find a mistake, and even if you do, these next three strategies can add even more to your check. Before we jump into those, I am going to do something unusual for the middle of a video. I want to ask you to pause right now and leave a quick comment. Tell me, have you ever actually opened your Social Security file and verified it year by year? Just type yes or no. That is it. I ask because looking through the comments on these videos shows me a huge gap between the folks who know this document exists and the ones who have actually opened it up. Your answer tells me exactly who is watching. Drop your comment below and then stick around, because these next steps are where many of you will find extra money without needing to find a single mistake on your record. If your work history shows any years with zero earnings among your top 35, which happens to a lot of people who took time off to raise kids, go back to school, look after an aging parent, or worked jobs that did not pay into Social Security, you have a massive chance to boost your check. Any extra year you work right now, even a simple part-time job making a modest amount, will kick one of those zeros right out of your calculation. Since the government only looks at your 35 highest paid years, a fresh year of income knocks out your lowest year. If you currently have zeros on your record, any income at all is better than nothing. Working a part-time gig that pays $15,000 replaces a zero with $15,000 of adjusted income in your average. Wiping out just one zero with a modest income can boost your monthly check by $50 to $150 for the rest of your life. Here is your action step for this strategy. Pull up your statement and look closely at the bottom of your work history where your lowest earning years are listed. Tally up how many of those 35 years show a zero or a tiny amount from a teenage job. Every single one of those low numbers is a spot where some extra income, like seasonal help, part-time hours, or side consulting, could permanently elevate your retirement baseline. This is a tactic that most folks nearing retirement or newly retired never hear about. Everyone focuses entirely on when to claim their check, completely missing the fact that you can still upgrade the underlying work history before you lock in your baseline pay. If you have not started drawing your Social Security money yet, your document contains a detail most people overlook without realizing its true financial value. For each year you hold off on claiming past your full retirement age up until you turn 70, your monthly payout grows by roughly 8%. That is a solid, permanent, inflation-proof raise that comes with zero market danger and requires no confusing investment schemes. There is absolutely nothing in regular banking or investing that gives you a guaranteed 8% yearly bump on your base money for the remainder of your life. Let us look at what that actually looks like with hard math. If your monthly check is $2,000, holding off for just one single year past your normal retirement age gives you an extra $160 a month for good. That adds up to an extra $1,920 every year for life. Waiting 3 years brings a 24% spike, which turns that same $2,000 base into an extra $480 a month permanently. And if you wait a full 4 years until you hit 70, your check jumps by 32% for the rest of your days. Your official statement lays out exactly what your estimated checks will look like at different milestones. Open your file and focus on the exact gap between claiming early versus waiting until age 70. Multiply that monthly variance by 12. Seeing that annual total add up over 15 or 20 years of retirement reveals the massive power of waiting. Here is a golden tip on this route that almost nobody mentions. This waiting math becomes even more powerful if you are the top earner in a marriage. When the partner who made more money holds off until age 70, the surviving spouse eventually steps into that maximized check size after the high earner passes away. Your choice on when to claim is not just about your own personal lifetime money. It dictates what your husband or wife will live on for potentially decades of widowhood. For couples with a big gap in their work histories, having the top earner wait until age 70 is often the smartest financial move the family can possibly make. If you are currently married, lost a spouse, or divorced after being married for a minimum of 10 years, you might qualify for a payout that is significantly bigger than what you get from your own career history alone. A husband or wife can collect up to half of whatever the higher earning partner qualifies for. If your personal check is less than 50% of your partner's check, you can switch to a higher payout tied to their history instead of yours. The government will not automatically make this adjustment for you. You have to speak up and request it. For grieving widows or widowers, you get to keep whichever check is larger between your own and your late partner's full amount. If the top earner held off on claiming to build up those delayed retirement credits before they passed, the surviving partner steps right into those extra bonuses through a permanently higher monthly check. If you are divorced, these exact same rules apply as long as your marriage lasted at least 10 years and you have not tied the knot again. You can draw a payout based on your ex's career without changing a single penny of what they receive. In fact, your ex-spouse will not even be notified that you applied. The direct action to take here is very simple. Give the agency a call at 1-800-77-21213 and ask them to compare your estimated personal check against any spousal or survivor money you might be owed. That breakdown is totally free and takes just one phone call. It has uncovered surprising financial bumps for folks who spent years assuming their current check was their only option. Now, let us tackle what I promised to reveal at the very start of this video. The specific scam going around right now in 2026 that tricks seniors looking for Social Security payment upgrades. I wanted to save this until you understood the real correction process, because knowing how it actually works is your best shield against their tricks. Here is how they trap you. Someone might watch a video just like this one or read a news story about errors in work histories and bigger checks. A few days later, they get an email or a phone call from a person claiming to be a benefits recovery expert, a federal retirement coordinator, or part of an audit agency. The caller insists that their database shows you are being underpaid by Social Security and they can claw back your missing money. They offer to do all the heavy lifting, filling out Form 7008, finding your documents, tracking the application, if you pay them an upfront fee of a few $100s, or hand over a slice of your bigger checks, sometimes 20% or more for years to come. Here's the single line that blows their cover instantly. Everything they are charging you for is completely free, and you can easily do it on your own directly with the government. Grabbing Form SSA-7008, ordering your old W-2s from the agency, pulling your IRS transcript with Form 4506-T, submitting the correction, and tracking your status costs $0. There are no approved outside companies that handle this. These operations have no special FastPass. They are simply taking the exact free steps I just showed you and making you pay for them. The Social Security Administration will never call or email you out of nowhere to tell you your check is going up. If anyone contacts you promising to secure more retirement money in exchange for a fee, you are dealing with a scammer. Hang up the phone immediately, delete the email, and if you want to fix your file, deal directly with ssa.gov or call 1-800-77-21213 on your own. Make sure to report these crooks to the official fraud hotline at 1-800-269-0271 and the FTC at ftc.gov. Doing this helps the authorities hunt down these rings and protects other folks before they get taken for thousands. Here is your exact step-by-step game plan beginning today. Before jumping into the steps, do one quick task. Hunt down wherever you store your past financial papers and gather anything showing what you brought in during your working life. Old W-2 forms, old tax documents, pay stubs, or even a simple list of your past employers and dates. Stash it all in a single folder. If there is an old box of financial records in your closet you have been meaning to toss out, leave it alone until you finish this process. That box could be worth a small fortune to you. Step 1. Visit ssa.gov to log in or set up your personal account. It is totally free and takes roughly 5 minutes. Stick strictly to the official ssa.gov web address. Avoid clicking random links in emails or ads that say they will take you there. Step 2. Pull open your statement and track down the work history overview. You will see every single year you worked lined up with a dollar amount next to it, going back to your very first job. Step 3. Compare those numbers year by year against your personal records. You are scanning for 3 specific red flags. Years where the number is way lower than what you actually earned. Years that show a flat 0 even though you were working. And years that are entirely missing from the breakdown. Give extra scrutiny to your highest earning years, because mistakes there do the most damage to your final retirement calculation. Step 4. If you spot a mistake, grab Form SSA-7008 from the ssa.gov site. Fill it out with your personal details, the years in question, and your true earnings. Write up a short, one-page cover letter that spells out the error clearly. Attach photocopies of your evidence, never mail the originals. Sign the form in ink, verify your signature before closing the envelope, and send it via certified mail with a return receipt to your local office. Or walk it in yourself and have them scan your papers on the spot. Step 5. Track your request. Most fixes take anywhere from 10 to 90 days to process. If you have not heard anything after 90 days, call 1-800-77-21213 with your certified mail tracking code and request an update. If any of these steps sound intimidating because you hate dealing with computers, listen to me closely. You do not have to use a website for any of this. Dial 1-800-772-1213 and ask them to mail a paper copy of your statement to your house and guide you through the correction over the phone. Or walk right into your local Social Security building and ask a worker to pull up your file on their screen with you. Alternatively, ask a trusted child, grandchild, or close friend to sit down with you for a single afternoon to look over the file together. There is no wrong way to handle this. The only true error is letting the process scare you off so that you leave your hard-earned cash sitting in a government account. Your monthly check relies entirely on decades of work data. If even one single row is wrong, your check is smaller than it should be, and it stays that way permanently until you step up and fix it. Nobody else is going to catch it for you. But the tool to double check is completely free, 5 minutes away, and open to you right now. One afternoon, that is the only investment required. And if that one afternoon uncovers just one wrong year, it can translate into hundreds of extra dollars hitting your account every month for the rest of your retirement. I want to leave you with a quick challenge before you close this video. Do not just watch this and move on. Open up your portal today before you do anything else and verify just one thing. Look up the year you made the most money in your entire career and make sure the number matches what you actually took home. Just one single year. That quick 5-minute check shows you immediately if your history needs a deeper review. One last thing before you head out. I want to hear from you. Drop a comment telling me what year you found an error, what state you live in, or simply confirm that you checked your file. Your comment could be the exact spark that inspires someone else reading it to open their file today instead of pushing it off till next month. Subscribe to the channel and hit that notification bell. Coming up next, I am detailing the Social Security rule that impacts folks who claimed their benefits early and assumed they were stuck with that choice. There is a short window to reverse or upgrade that decision that most seniors miss, and it cuts off at a strict age. You need to watch that video before you hit that age milestone, not after. Subscribe right now so it drops into your feed. Pass this video along to one person you care about who is on Social Security or getting close to retirement, especially anyone who was self-employed, worked for a mom and pop shop, or changed their name during their career. A single share from you could mean thousands of extra dollars in their pocket for the rest of their life. I will see you in the next video.